Good evening, students. Hope you all are doing fine. Me as well. So, I'm expecting more replies. See, you have to reply my good evening to my good evening, right? So that gives me energy as well. In these times of pandemic, students as well as the faculties need energy, right? We all are locked inside our homes since a long time. We all have our own issues, concerns. This is how we are going to be there for each other, and yes, we have to channelize our energy. So I'm waiting for more replies, right? You guys should provide me the requisite energy so that I can start well. Good evening, Radha. Delia. Okay, so here we go. We had left with a chapter of audit of special entities, audit of different types of entities, right? As I was telling you that this is the last chapter of your syllabus and we all have come a long way from the basics of audit, from what is audit till conducting the audit of various institutions, right? Company audit, bank audit, and now audit of different kinds of institutes, different kinds of entities, right? So we had done what we need to do in this chapter, the basics, then some general considerations, right? Then we started from scratch, from a very easy level, the audit of a sole trader, the sole proprietor, right? And then, yeah, I suppose Vimla, today is not the last class. The last class is on Monday, 31st of August. And I'll tell you how are we going to resolve your doubts, your concerns on that day, right? So, I'm good, Satish. Thank you. Okay. Dikshik, I'm too excited. I hope I'm being able to do justice to your lectures, to your concepts, to your chapters. And I hope so, I wish so. I fully justify your expectations today as well, right? So, as I was telling you, we did sole trader, we did partnership firm, okay? Now, today we will resume with LLP. As I told you about LLPs, what are LLPs? How was this concept introduced? How did this form of organization came into effect? The limited liability partnership, right? As I told you, the limited liability partnership is what? It is bearing the advantages of both the company form of organization and the partnership form of organization, right? The limited liability as per the companies and less compliance, not that much of complex as the partnership form of organization. So we'll resume today with our LLP, right? Let's move. So first of all, as I am receiving more good evening replies, so there has been 2 classes. I've not shown you guys any video, any informative or educational video. So let's go. Time for a video, right? Just wait. Upon LLP. Okay, just a small educational video on what are LLPs, right? So let's move ahead. Anjali ji. I'm sorry. ठीक है? So yes, it was a small educational video for what is an LLP. You all have read about the features of a partnership, the features of a company form of organization. So in LLP, we'll find a blend of both. Okay, let's move ahead with our topic. Here we go, the LLP. So, right, what are the distinctive features of an LLP? So, LLP is an alternate corporate business firm which carries the benefits of both. Just a second. Yes, both a limited liability company and a partnership, and it is governed by the LLP Act of 2008. The Act was framed in 2008, but it came into effect in 2009 with effect from April 1. So you people need to understand that for LLP there is a separate act, the Limited Liability Partnership Act 2008. The Indian Partnership Act is not applicable to an LLP. This is one of the basic confusions among the students. They think that Indian Partnership Act provisions are also applicable to an LLP, and it is not like this. So all other features which we have watched in the video, right to manage business directly, separate legal entity, and one partner is not responsible for or liable for another partner's negligence. Maximum of 2 partners, and there is no minimum of 2 partners, no maximum limit of the number. And like in the partnership, we have a partnership deed. In LLP, we have the LLP agreement. So one of the peculiar features of LLP is that there should be 2 partners. There should be 2 partners, and those at least 2 partners who should be the designated partners. right? Who should be the designated partners? They are known as designated partners. Like in company form, there are directors, okay? So in LLP, there are designated partners. So in companies, the directors have to take their DIN, director identification number. This is a number which is particular to only one person to know in how many companies is he a director. He can be a director in as many companies as he wants as per the ceiling and with one DIN only. In the same way, in an LLP, there is a DPIN, designated partner identification number. It is DPIN. So for your MCQs, for your true false, for your correct incorrect, this is one of the questions that how many designated partners at least should an LLP have, and it should have two, and they should have their DPIN. They should take their DPIN. They should apply for their DPIN as well, the designated partner identification number. Right? Let's move ahead. Okay, rules regarding accounts, audit and returns. So LLP is under an obligation to reflect okay. So yes, rules regarding accounts, audit and returns of an LLP. So LLP is under an obligation to maintain annual accounts. They are required to maintain books. These books should contain all their expenditure, like you can see, money received and expended by the LLP, how the receipt and expenditure has taken place, a record of the assets and liabilities of the LLP. The PPT is not visible, just a second. I'll see. I hope it's visible now. The PPT is visible. बिजली PPT दिख रही है? Okay. So particulars of all sums of money received and expended, right? Assets and liabilities. Cost of goods purchased. So as whatever we maintain in our normal books of account, that has to be maintained by an LLP as well, right? So this is important for you. This is important for your correct, incorrect as well. This one. A statement of accounts and invoices. These are the returns. These are the returns which an LLP has to file with the registrar of companies. Okay. So one of the main differences here lies that for a partnership firm, there is registrar of firms. But for companies and LLPs, there is registrar of companies under MCA. So every LLP has to file a statement of accounts and insolvency. So what is a statement of accounts and insolvency? A statement of accounts and insolvency is a statement in which an LLP discloses that yes, we are solvent at this particular point of time. We are solvent. We disclose our accounts. We are solvent as on date. That is the form number 8. This is important for you, right? So it should be filed by an LLP every year with the registrar within a period of 30 days from the end of 6 months of the financial year to which such statement relates. So if the financial year is 1st April 2019 to 31st March 2020, within 6 months, from the end of 6 months, right? every year within a period 30 days from the end of 6 months. The 6 months end on 30th September. So by 30th October, within 30 days, the LLP has to file this form 8. Okay? Please remember, the year closes on 31st March. 6 months, 30th September. So this is the time period. This is the time period, 30 days. Within this time period, you have to file this form 8. Right? And what do you declare in this form? You declare in this form that about your solvency, about your liabilities, your income and expenditure. Okay? Every LLP would also be required to file an annual return in form 11. So form 8 is for statement of accounts and solvency. Form 11 is for when you audit an LLP, you do check these returns as well. Within 60 days of closing of the financial year, which will be available for public inspection on payment of prescribed fee to the registrar. Right? So these are public documents. These are available for inspection. These are available to the common people as well. They can pay some fee and then they can have access to them. These documents. So form 11 is for the annual return. What is an annual return? Annual return is like an annual report card. Okay? You remember the school days when we were issued report cards based upon our performance in co-curricular activities, in academics and attendance, everything was there from A to Z. This is something form 11. This is an annual return of the LLP. You have to file it with the RSO within 60 days. Okay? Then, audit of LLPs. The accounts of every LLP shall be audited in accordance with Rule 24 of LLP rules. This is something which is there. It is like you should know it. It is not like some MCQ or correct, incorrect would be asked out of it. This is Rule 24 of LLP Rules 2009, which states that any LLP, so there is a limit, whose turnover does not exceed in any financial year 40 lakh rupees, or whose contribution does not exceed 25 lakh rupees. Contribution here refers to the LLP's capital. It is not required to get this account audited, right? The contribution should not be more than 25 lakhs and the turnover should not be more than 40 lakhs in any financial year. These are the two conditions. If these two conditions are met, you are not required to get your accounts audited. But if the partners want, they can get these their accounts, the accounts of the LLP audited. If audited, they will be audited as per the rules only. It doesn't mean that if you don't want you are not mandatory. It is not mandatory for you to get your accounts audited, but even you are getting it audited voluntarily, so these rules will not be applicable. So I can ask you a question. The partners of LLP XY and company LLP want to get their accounts audited voluntarily. Rule 24 of the LLP Rules 2009 is not applicable in this case. It's a good question. The answer is incorrect. Even if they are getting their accounts of the LLP voluntary audited, Rule 24 of LLP rules will still stay there, will still be applicable to any type of audit, whether it is mandatory under the law or it is voluntary for an LLP. Okay? So let's move ahead. Rules regarding accounts, audit and returns. Again, we have the power of the registrar. So registrar has power. Registrar has powers against the companies as well. Registrar has power with respect to such information which he considers necessary for the purpose of carrying the provisions of that, Very simple. He would also have the power to summon any designator. Summon any designated partner means he can call out. He can ask the partner to visit his office for any questioning. For questioning him. So he can summon. Summon, we all know what is a summon. Summon any designated partner or employee of an LLP before him. So what does this mean? Before him means that he should be present there in his office on this particular date at this particular time so that he can ask questions from them with respect to their LLP. In case the information has not been furnished to him, or in case the registrar is not satisfied with the information. So there are two cases. It has asked for that the registrar asked for certain information from the LLP. The information was not filed through the respective forms. Or even if the information was filed, the registrar is not satisfied. He wants to meet in person. If he wants to meet in person, he can summon them and call them to his office. So this is important. What documents are available for public inspection? Yes, Uma, we did discuss about the voluntary audit of LLP. The limits are applicable 40 lakh turnover and 25 lakh capital contribution. If less than that, then you can get for voluntary audit. Right? Okay, Radha. Form 8. Form 8 is a form which tells you, like if you talk about income tax, there is 26 AS. Right? There is income tax return. The same manner, these are two different forms. Form 8 is a statement of accounts and solvency. In that particular statement, you declare, you'll read about LLP in your CE finals as well, you declare in your economicals that you are solvent enough. You will present them with your financial health, that we are solvent enough. Carry your business in the market. And annual return is just an annual report card. Every time there would be the name, the address, the meetings held of the designated partners, who are the designated partners, what were the extraordinary transactions carried out, all the balance sheet figures, all the profit and loss figures, right? The same way the company's forms. You might not have read about the company's forms in the same manner. The Form 8 and Form 11 are two different forms. Form 8 includes only about those issues which are concerned with the solvency position of the LLP. But Form 11 contains everything. It is only. Form 11 contains everything about the LLP. And it is an annual form, like an annual report give to the government about what you have done, how have you performed during the previous year. Right? Okay? So, powers of the registrar we have done. Documents available for public inspection. Yes, this is a short question for you. What are documents available for public inspection? Following documents. What are these documents? Incorporation document. You can understand what is an incorporation document? The deed, the agreement, names of partners and changes if any made, statement of account and insolvency, and annual return. So you can pay a minimum fee, that is rupees 50, and if you want any extract, rupees 5 per page. If you want to inspect only, then it is rupees 50. If you want a certified extract, what is an extract? You ask them to just give a photocopy of that, a mirror image of that on paper, and they charge you rupees 5 per page. Okay? So, in the condition of default, it is written there, you can read from there that if in the case LLPs file relevant documents after their due date, there are additional fee up to 300 days. So, up to 300 days from your due date of filing the requisite form, up to 300 days, no action of prosecution is taken. You know what is prosecution? Can anybody tell me what is prosecution? I want to know if anybody can tell me what is prosecution. Yes, Ravya, it's still applicable. Prosecution, what is prosecution? I need to know. Just let me know about whether you guys know about it or no. The prosecution. Okay. So, in case there is a delay of 300 days or more, yes, Satish, right? Prosecution is a suit is filed. Right? Litigation. Cases. So, if there is a delay of 300 days or more, they will have to pay the additional fee as well as they are liable to be prosecuted. So, what is additional fee? Additional fee is from the due date to 300 days. Till 300 days, they are not prosecuted. The designated partners are not prosecuted. But even they continue the default even after 300 days, then they can be prosecuted as well along with the additional fee. Like you read in your law, fine or prosecution or both. Okay? The Act also contains provisions for compounding of offences which are punishable with fine only. What is compounding? I need to know. What is compounding? Compounding of offences. What is compounding of offences? I'll wait for your reply. So next we come to the third part, LLP, our own part. First we need to know about what is LLP, how does it function. Then audit of LLP. Audit of LLP, appointment of auditor of an LLP. The auditor may be appointed by the designated partners. Very important, correct for you people. Auditor may be appointed by the designated partners of the LLP. So there could be more than 2 partners. The law lays that there should be at least 2 partners who are designated partners. It is compulsory for an LLP to have 2 designated partners at least, right? So the auditor would be appointed by the designated partners. When? To see the first point, at any time for the first financial year. Any time for the first financial year. Any time for first financial year. Right? But before the end of first financial year. So whatever is your first financial year of working, you could have incorporated your LLP on 10th of November, 20th of February. This is your first financial year. Right? Any time for the first financial year, but before the end of, whenever it ends on 31st March, you have to appoint an auditor for the LLP before the end of the financial year. This is with respect to first financial year, when the LLP is incorporated and it starts working. So now from next year onwards, at least 30 days prior to the end of each financial year, other than the first financial year. So every year you have to appoint the auditor. So at least 30 days prior to the end of each financial year, somewhere near February. You can appoint before that as well, but it sets up the limit, the cap. At least 30 days prior to the end of the financial year, the auditor should have been appointed by the LLP. Okay? To fill the casual vacancy in the office of the auditor, you all have read about in company audit what is casual vacancy. To fill the casual vacancy, the auditor can be appointed at that particular time only. To fill the casual vacancy caused by a removal of auditor, completely fine. The next point is important. However, the partners may appoint the auditors if the designated partners have failed to appoint them. The partners may appoint the auditors if the designated partners have failed to appoint them. Right? In that particular case only, the other partners who are not the designated partners may proceed ahead with appointing the auditor. So this was all about appointment of auditor. Right? Let's move ahead. What is the purpose or need of audit of an LLP? You can go through this. Yes, right. You guys, everybody knows about compounding. Almost all of you are right. What is compounding? Yes. Compounding is like we have option to pay fine instead of punishment, as Dixit said. Option to pay fine instead of punishment. Compounding, right? So this is a 4 marks question. What are the advantages? What is the purpose? What is the need of getting an LLP audited? You can get errors detected. If there are any disputes within the LLP, they can be sorted out. Reliable banks other financial institutions rely upon the audited financial statements for better compliance and management. And in the case of reconstitution of an LLP, retirement or death or admission of a designated partner or a normal partner. So you'll find one or more almost like same as the advantages of a partnership. Auditor's duty regarding the audit of LLP. Now it comes to on us. We have been appointed. Now what are our duties regarding auditing an LLP? So first of all, the engagement letter. We have read it in our first chapter, right? The engagement letter is the most important in writing. Then we'll look through the minutes book of the LLP. The minutes book where the details of the meetings have been written. When did the designated partners meet? When did the partners meet? When were the meetings held? What was the occasion? What was the matter on which they discussed? All should be there in the minutes. So it gives you a brief insight into the working of the partnership, the LLP, throughout the previous year. Okay? Any resolutions passed? Then you should look out for LLP agreement. Like you look out for your partnership deed. What should be there in LLP agreement? The nature of business, the amount of capital contributed, the interest, the duration of LLP, drawing, salaries, everything like you did in the partnership. And auditor what should the auditor mention in his report? So the engagement letter, the minutes book, then we have to go with what the LLP agreement says, carry out a normal audit. As we carry out the audit in a normal concern, we have to carry out the audit of this LLP as well. The peculiar features I told you about, the designated partners, the Form 8, statement of solvency and accounts, and Form 11, the annual return, you have to check all these, right? The auditor should mention whether the records of the firm appear to be correct and reliable, whether he was able to obtain all information for his work, whether any restriction was imposed upon him. These are all general points. Okay? Moving ahead. Okay, so that was all about LLP, right? So we move ahead with the concept of, we have done sole trader, we have done partnership, we have done LLP. Any doubts regarding LLP till now? So I can move ahead with cooperative societies. Yes, Payal, you are right, on or before 31st March, right? Abhilasha, designated partner is a partner. This is just a post. Designated partners are those partners which have the authority in an LLP to carry out most of the work. Like they have the sanctions, they have the authorities. You can say the appropriate authorities. They can they work on behalf of the LLP. Like you have a managing partner or a working partner in a partnership firm. You need to have designated partners in an LLP whom the authorities can address to, who could be summoned, right? The bank accounts operation, the deals, the contracts to be entered on behalf of LLP. So these designated partners assume importance in that case. Yes, Vrinda, Chinnamma, all our partners, 2 partners are uplifted to a new level, the designated partners. It is like you are a student, but when the teacher makes you the monitor of the class, allots you duties to monitor the class, you are still a student, but you have some rights, you have some authority over others, which has been delegated to you by your teacher. The same manner, there are designated partners. They all are partners, but 2 of them, at least 2 of them are designated partners who use their DPIN in every document, filing online, physical documents, whatsoever. These partners are signing authority, operating bank accounts, everything. I told you about the working partner in a partnership firm. The same manner. So I hope that is all clear. Let's move ahead with cooperative societies. So, cooperative societies. Okay, Prabdeep. Certified copy and extract. Extract is a certified. Suppose what you do, you get your notes, notes from your friend lost. Okay. So that is just an extract. take his book, you take his notebook, get some of the pages Xerox. That is just an extract. Or what do? You put it in front of you, you open your own notebook and write something from them. You just wrote an extract out of that. Okay? So when that particular extract, whether written down or photocopied, and that is certified by the appropriate person in LLP, whosoever is having custody, that is known as certified copy of the extract. Okay? I hope, Prabdeep, you are clear. Cooperation. We talk about cooperation. Okay? So cooperation is what? We cooperate with each other, we support each other, we work together. This is the foundation, this is the underlying principle of a cooperative society. In a world full of people who want to make profits at any cost, here comes a group of people who want to help each other, who support each other among their group in production, distribution and consumption. These are cooperative societies. A cooperative society is basically a group of people who come together. They become the members of that particular society. They get a society incorporated. Can get a society incorporated, right? Registrar of societies. Like we have registrar of firms for partnership, registrar of companies for companies, registrar of companies for LLPs. In the same way, we have registrar of societies for registering a society. Some people come together, they contribute towards the capital, they become members, they take subscriptions, and they get their societies registered to give it a legal form of organization, right? So it is a cooperative society. What do? They enter into the production, distribution, consumption chain and offer products and services to each other among the group only, to each other on economical basis, reasonable basis. Different from the market. The pricing is completely different from the market. Another peculiar feature, they work only on cash, no credit. They work for their members. A cooperative society works for their members. Let's see about a cooperative society. A cooperative a cooperative, also known as cooperative, co-op or coop, right? So it is an autonomous association. Autonomous means nobody is dependent upon each other. Yes, Payal, right. So an autonomous association of persons united voluntarily. There is no nothing that kind of a legal impact involved. They have to. It is their voluntarily. They unite voluntarily to meet their common economic, social, and cultural needs and aspirations through a jointly owned enterprise. They all own the cooperative society jointly. Cooperative society is a business organization with a special mode of doing business. They pull together all the means of production cooperatively, in cooperation with each other. Elimination of middlemen. So what is the cons of a middleman? The price gets increased as soon as the number of people increases in any chain. From production to consumption, the price of the commodity or the service is going to increase, and exploitation from all outside forces. The philosophy of cooperative society is to serve the common man and to liberate him from the oppression of the economically strong people and organization. Oppression means exploitation in a negative manner. Exploitation is anyway negative. So they get exploited by the economically strong people and organizations. One of the main features is mutual assistance and service are the objectives as distinguished from the aim of other forms of organizations which are primarily profit making. Profit can enter it as their wish. Also, they are free to leave a cooperative society, but they cannot transfer their share. So, they are given their share. In cooperative societies, they are also allotted their share. They can leave the society, they can be there, they can make profit, they may not make profit, but they cannot transfer their share. The shares of a cooperative society are non-transferable. Okay? Yes, Satish? Right, Palak. That is why I'm reading it, because sometimes it happens that I have to keep the whole material in one slide because it pertains to one topic only. Whenever it is important, I just shift it to 2 slides, use 2 slides. But that is why I'm reading it. When you get the PPT, when it is with you, the font is clearly visible and you will be able to read. Right? The cooperative organizations are subject to rules and regulations of the government because we have to register the cooperative societies. We have an act called the Cooperative Societies Act 1912. This is a central act. 1912, pre-independence period. We still have that. The Cooperative Societies Act, you know, how does this form of organization, how old this dates back to? The pre-independence period as well. We have the partnership at 1932. The Cooperative Societies Act 1912. Cooperative societies, like the companies found their birth in Britain, the cooperative societies were also formed for the first time in Britain. So, it is governed by the Central Act of Cooperative Societies, right? It is that particular fundamental law which is applicable on a cooperative society. Many states have their specific Cooperative Societies Act as well. Many states do have. And then that particular act is applicable upon their cooperative society. For example, Maharashtra, West Bengal, Orissa, Punjab, they have their own Cooperative Societies Act. The State Cooperative Societies Act. Right? The capital of a cooperative society is raised from its members. This is known as cooperation. With cooperation, they form the cooperative organization. Right? And one of the most peculiar features of a cooperative society is whatever be your share in the cooperative society, you are just entitled to 1 vote. This is how they maintain the autonomy in a cooperative society. Right? So, let's move ahead. Nobody can control the cooperative society based upon his share capital. Now we come, that was all about a cooperative society. Okay? That was all about a cooperative. Chinmay, thank you. Okay, you guys keep on entertaining me, right? That gives me energy. That is what a healthy interaction is, right? Okay. So, yes, Amul is Radha. Franchisee, not like this. This is something you are asking a dubious question. I'll come to that, Radha. We'll discuss that definitely. That's an interesting question. Radha, you always come with interesting questions, right? And you stay after the class as well for me to answer your question. I'll be there. Okay. So, audit of a cooperative society. So, audit is carried out as per section 17 of the Cooperative Societies Act. Again, as I told you, there is Registrar of Societies. When LLP, the Registrar is there. If you talk about company, Registrar is there. If you talk about partnership firm, Registrar is there. Who is the Registrar? A man who keeps a register and records everything in that register is a Registrar. So in back days, they used to maintain registers, physical registers, with respect to every organization falling under their jurisdiction, to which they have their authority upon. Now it's all digital. Everything is digital, right? So the registrar shall audit or cause to be audited by some person authorized by him by general or special order in writing in this behalf the accounts of every registered society once at least in every year. It is the registrar which asks the society, which may even engage the services of an auditor, the registrar himself, to get the accounts of the cooperative society audited once at least in every year. It could be more than once as well, but at least once every year, annual audit should be there as per the registrar's direction. What shall the audit include? The audit shall include examination of overdue debts, valuation of assets, liabilities. Will come to that. That is a very important question. The registrar, the collector, or any person authorized by general or special order in writing this behalf shall at all times. So whoever is auditing the books, what do they require? We have done about the rights of an auditor. They should have at all times access to your data, to your books, to papers, the securities of the society. So when a society has surplus funds, it is definitely going to invest that fund in investments. So all the securities, every officer of the society shall furnish information, whatever is sought from them. So registrar, it is there in the presentation, it is a person who is appointed to perform the duties of a registrar of cooperative societies under this act. One important info I want to share with you is that today we will be covering some, I would say, typical entities, like we will be covering cooperative societies, local bodies, and government audit. So, as I told you guys, these are conceptual topics. We need to understand, we need not mug them up. Okay? There would be no charts, no stories for these because these are conceptual. We have to understand them. All the topics, all the points are with their respective headings. We should learn them, right? Wherever I feel that I can give you some mnemonic or some memory technique, anywhere I can help you with that, I will definitely give you that in today or next class. Okay? But today's class, you please understand that in the next class, the topics which we'll be leaving today, that would be very, I would say they are very short topics. Okay? One question topics they are. So in that those particular cases, definitely I am going to give you story or chart, something like that, so you are able to learn those topics. Because they are quite general, but again specific topics. But today, they are tricky, so we have to understand them and we have to learn them as it is. We need not work them out. Let's move ahead. Role of a chartered accountant. Again, we can audit, but apart from audit, what other services can we give to a cooperative society? Guidance in accounts writing. Must. Installation of accounting system. Internal audit. Management accounting services. Taxation. Okay, give me an example of a cooperative society. If you people watch TV, give me an example of a cooperative society. Yes, Ganga, all need to get registered. Can you guys give me an example of a cooperative society we watch every day on the television, enjoy a lot? I'm presuming that you people do watch TV for entertainment purposes and always not stuck to your mobiles, playing PUBG and all that, right? You do something productive for your entertainment as well. This is all apart from audit services. We can give these services to the cooperative societies as well. So, what are the points you need to keep in mind with respect to the audit of a cooperative society? What points? See, so you have two questions over here. What are the points to keep in mind with respect to the audit of a cooperative society? And another question is specific points while auditing the accounts of a cooperative society. So these are the points you have to keep in mind. There are two topics in your study module. One is points to be kept in mind with respect to the audit of a cooperative society. Right? So you need to know about the points. But there are some specific points. So be alert, be cautious what the question is asking you. If it is asking you, yeah, right. File next, last class. I'll share the PPT because I can see if you people ask me doubts, whether I can incorporate those doubts in the material itself. I'll have to see, right? And if I can get you some extra practice questions incorporated into the PPT itself, like I've done in previous chapters as well. So we'll study from the PPT today, and in the last class on Monday, before the class itself, I'll share the PPT. You'll get the PPT with complete in all aspects on Monday. Okay? Yes, Amul. Oh my God. Yes, Payal. Yes, for Gokul Cooperative Society. Right. Okay. So, yes, Sanjay, Cooperative Society is a central act, and I'll come to that. Let's continue. Audit of a cooperative society. So, this is the points are over here, right? And you have it in your study module written very clearly, very crisp. You can directly read it from there and learn from there. We will discuss it from there only. I have the module with me. We'll discuss them from there only. Right? The points to be kept in mind with respect to the audit of a cooperative society. Let us see that. So you have the screen with you. Just pay attention to the points. I'll take and I'll read it out from the module itself. So qualification of auditors, right? From qualification, Sayan, every year you have to reappoint. Sayan, every year you have to reappoint, right? So first is qualification of auditors, right? A chartered accountant under the Chartered Accountants Act can audit a cooperative societies. Some cooperative societies can even allow people, some state cooperative societies, right? Some state cooperative societies. Do you want to discuss it right now, or should I open the module over here? I just wanted that you guys should read out the headings and we'll discuss the points. So when it comes to qualification of an auditor, there is a chartered accountant under the Chartered Accountants Act who can carry out the audit of a cooperative society, right? Some state cooperative acts even allow people holding diploma in accountancy to carry out the audit of a cooperative society. Okay. Second is appointment of the auditor. The auditor of a cooperative society, again appointed by the Registrar of Cooperative Society, and such auditor conducts the audit on behalf of the Registrar. He conducts the audit on behalf of the Registrar. Right? He conducts the audit on behalf of the Registrar, and as per the directions of the Registrar, he submits his report to the Registrar only. Right? So, but it doesn't happen like that, that the Registrar is appointing the auditor. The fees has to be, the audit fees is paid by the society only. It is not paid by the Registrar. Then next we have, after that, right, we have books, accounts and other records. Books, accounts and other records. So, in the same manner, the cooperative society is required to keep its books, A cooperative society is required to keep its book. The state governments can make rules. What kind of you can say transactions they need to make in their books, keep books for? Normal transactions. What is the sum of what is the money received, expenditure made by the society, and all the sales and purchases of goods by the society, assets and liabilities of the society. Normal books relating to these. Okay. What could be the other books? Cash register, a register of collection from debtors, and a register of recovery of loans. The society can give loans to its members as well. The loan disbursement register, any other kind of subsidiary book. Restrictions on shareholdings. Yes, this is important. It says, in a society where the liability of a member of the society is limited, no member of a society can hold more than 20% of the total of value of shares or rupees 1,000. Okay, I'll come to that. We are going through all the points. I'll come to the complex points, the tricky points once again with the board. Okay, after I close the screen sharing. So there is restriction on shareholding. There is restriction on loans. Loans, like a registered society cannot advance loan except to a member. If it wants to advance loan other than a member, it can only advance to another society, and that too with the permission of the registrar. There is a restriction on borrowings as well. Point number 6. What does it say? It says that a registered society shall accept loans and deposits who are not members, subject to restriction and limits of the bylaws of the society. So then you come to investment of funds, right? Let us do that. Okay, so we are at point number 4. Point number 4 says that restriction on shareholdings. When it says shareholding, as I told you, shares are audited to the members in the cooperative society. So what does it say? Just listen to me. I'm reading it out, then I'll explain it on the board. Right? According to this act, a society where the liability of a member of the society is limited, no member of a society other than a registered society can hold such portion of the share capital of the society as would exceed a maximum of 20% of the total number of shares or of the value of shareholding to rupees 1,000. So whatever be the number of shares, total number of shares, you can just, of the total number of shares, 20% of total number of shares is the maximum you can have a shareholding in the cooperative society. This is the maximum. The maximum shareholding in a society allowed is 20% of the total number of shares, less than equal to this, right? Or shares of the value of rupees 1,000 or so this is the simultaneous conditions. If you hold 20%, whatever barrier you reach first, if you reach rupees 1,000, that is completely fine. You cannot hold more shareholding than that. And if you haven't reached rupees 1,000, but you have reached the maximum number of shares to 20% of the total number of shares, then you have to stop. You cannot increase your shareholding in the cooperative society. Why is this required? To maintain the autonomy. It is an autonomous association. Nobody should get majority. Nobody should be able to dominate the cooperative society as per his or her will. Okay? This is what we have over here. This is the limit, right? This is there in your study module. I'm just writing it on the board. Then restriction on loans. So this is not, for example, the shareholding. This is applicable to members. A society can hold shares in another society. That is completely fine. A society can hold shares in other society as well. Okay? So this doesn't apply to a society holding shares in another society. Okay? Sanjay, I'll come to that definitely. Let us complete the audit. I'll come to that. I'll definitely answer your doubt. So this applies to members only. This doesn't apply to a member cooperative society holding such shares. Then is restriction on loans. So this is very simple. A cooperative society cannot advance loans to people other than its members. It is formed by mutual cooperation. It is formed by mutual cooperation. It should help the members only. If they have surplus funds, they cannot advance loans outside the society. Right? If you have surplus, if nobody is in the requirement of a loan, just invest it in securities. Make investments in the name of the society, but you cannot advance loan outside the society. However, if you want to, you can advance loans from the society to another society, and that should also be a registered society. Another registered societies, yes, whosoever is asking me over here that Payal, that is face value only because the cooperative society's shares are not tradable. As we have done, they are not transferable. Right? This is the mutual thing. They are not there in the market. Okay, so there is no concept of market value in that. So, yes, there are some societies which are registered, there are some which are not registered. There are some. I'll definitely tell you about it. So, we were on that point, the restrictions on loans. A society cannot advance loan other than to its members. If it wants to advance loan, it has to advance loans to another registered society only, and that too with the permission of the registrar. This is the restriction on advancing loans by a society. Okay. Nidhi companies are a bit different. They kind of work on the same principle, but Nidhi companies are somewhat different. The Nidhi fund, many cooperative societies, many scams have happened with the Nidhi companies. Right? Nidhi companies work a bit different. Okay? Restriction on borrowings, yes. A society can accept deposits from persons who are not members as per the rules of the society. The society itself has to make rules whether it can accept deposits from members, from people other than the members of the society. If the rules and bylaws of the society allow for that, yes, the society can borrow money. Now next is investment of funds. We have investment of funds. We have done till 6 point investment of funds. Yes, if it is a cooperative society, money of the cooperative members is involved, then it is of utmost importance that the money is invested in safe instruments and in safe securities, the surplus money. Because what will you do with the surplus money? You cannot advance loan to anybody. There are only some of the members who might not be requiring loans. What do you do with the surplus money? As a layman, invest the money, you will also invest the money in security. But there are some restrictions. The society may invest its funds in any one or more of the following. So what are these? Let us see. Okay. So society may invest in a central or cooperative bank. Again, a cooperative bank is like the same we have done in bank audit with cooperation of the government. A cooperative bank. So central, right? It can invest its money, it can deposit its money in central or state cooperative bank. Central or state cooperative bank. then in any of the securities specified under Indian Trust Act. There have been some securities as specified under the Indian Trust Act in those securities. Okay? In the shares, securities, bonds or debentures of any other society with limited liability. So in the securities of any other society. Right? What else? In any cooperative bank other than a central or state cooperative bank as approved by the registrar. So a bank other than this bank. Other than this, any bank, right? Or a central or state cooperative bank, any other cooperative bank with the permission of the registrar. Right? Then in any other money is permitted by the central or state government. So there are 5 points. Any other securities as approved by central or state government. Okay, so there are 5 points. This is an important question. Where can a cooperative society invest its funds? It can invest its funds in a central or state cooperative bank. Just remember the principle of cooperation, right? This is like you are a group. You are a group of 10 to 15 friends. You have money. You have collected money for the benefit of each other. So what benefits are you going to provide your friend circle out of that money? In the same way, just think from the angle of cooperative society. I would like to give you a tip over here. Whenever you are going to attempt a question, whenever you are given a situation, a case study in the question paper, don't attempt it just from the perception, from the viewpoint of a student. Just imagine yourselves in that particular situation. Imagine yourselves to be the person. Step into the shoes of the person in the case study. And even if you don't remember the answer, whether you have mugged up, whether you have learned conceptually, even if you don't remember the answer, your common sense will prevail. Your common sense will lead you to the answer. Right? So applying my common sense, I would say there is cooperative society, so its securities would be required to be invested in those areas where there is not much risk at all. Like in a cooperative, central cooperative or state cooperative bank, in the securities of any other society, right? Securities specified under the Indian Trust Act. Okay? Then in any cooperative bank other than the central or state cooperative bank with the permission of the registrar. Last is any monies as permitted by the central and state government, the residual category which will be permitted by the central or the state government. Okay, so these are the 5 points where a society's funds could be invested. Okay, what's next? Yeah, is your answer so late or what's happened? Yes, Payal, you are right. Ramneet, bylaws. What are bylaws? The rules, regulations, the policies you frame while starting a business, starting a form of organization. Those are known as bylaws. Okay? Bylaws are the rules, policies, procedures, regulations you make and which carry a legal intent. They are bylaws. So yes, then we have investment of funds, contribution to charitable purposes, right? Again, the society can contribute to the charitable purposes, but with the permission of the registrar, okay, right? So it can contribute to the charitable purposes as well with the permission of the registrar, and not an amount exceeding 10% of the net profits remaining after compulsory transfer to the reserve fund for any charitable person, right? So here you go. What do you need to calculate? So a cooperative society has to transfer some money to its reserve fund. Okay? A cooperative society no issues. Sanjay, cooperative society is required. For example, we are a group, we want to, normal people, you take the example of villages, right? Take the example of villages. We have milk cooperative societies, like we have self-help groups, the women self-help groups, So there is something where market element gets involved as soon as the production and distribution chain increases with the more number of people falling into that chain, the price of a particular commodity or a service also increases. So what do? Instead of getting into the market and selling their products and services, they produce for each other and sell to each other within the society. That is why cooperative societies are required. Okay? Ramneep, restriction on borrowings means a society cannot borrow, a society can borrow from outside the members of the society, from outside people, but it is subject to the bylaws of the society. While forming the society, all the members have made some rules and regulations. If they allow, they don't speak about it, then the society can borrow. But if they put restriction on it, that आप बाहर से borrow नहीं कर सकते, you cannot borrow from outside, so then you have to stay there and you cannot borrow. You can borrow from your members only. If the members want to advance you money, you can borrow from them. Okay, then comes contribution to charitable purposes. A registered society with the sanction of the registrar contribute an amount not exceeding 10% of the net profits remaining after compulsory transfer to the reserve fund for any charitable person. So a charitable society has to transfer net profit minus reserve fund amount transferred to reserve fund. Okay, so there is a prescribed percentage. There is a prescribed percentage you have to transfer to reserve fund. After transferring this, whatever net profits are remaining with you, 10%, not more than 10% of this profit you can use for charitable purposes. Okay? After transferring money from your profits, appropriation of money, you have a point as well. Appropriation of profits, the 11th point. Appropriation of profits is what? Before declaring any dividend to the members or bonus to the members, before declaring anything, you have to appropriate money to the reserve fund. There is a reserve fund maintained by the society. So you have to transfer some money to that reserve fund. What is the reserve fund for? We all know that, we have read in our commerce. The reserve fund is for contingencies, right? So after transferring money to the reserve fund, whatever balance you have left, not more than 10% of that balance you can transfer to charitable, till up to 10%. Suppose you are left with 1 lakh rupees, so you can contribute to charitable purpose only up to 10,000 rupees, not more than that, right? That is what your contribution to charitable person and appropriation of profits is, right? Then we are left with point number 9 and point number 10. Contribution to education fund and investment of reserve fund outside the business. Low, board dekho. So I hope you can see the board. I'll write it in a proper manner, right? That was just for your understanding. I'll write it in a proper manner. Okay? If you want to note it down. Please, you can note it down. Simran, just to give them an option that based upon cooperative principle, you have to deposit in a cooperative bank only. You know, just to share the same cooperative principle, to advance the same cooperative principles, to encourage the same cooperative principle. They have given the option of central or state cooperative bank. Now they are giving the option of other banks. Okay, let's move ahead. So we had contribution, investment of reserve fund outside the business. Investing the reserve fund outside the business, yes, it is allowed. You can invest reserve fund outside the business. So some state acts, Vrinda, the shareholding is like this, that you can hold shares in a cooperative society maximum of 20% of the total number of shares. For example, the society is having shares of 10,000. The total shares of the society are 10,000. So as a member, you can hold maximum 2,000 shares only. Okay? Maximum 2,000 shares only, not more than that. Less than that is possible. And if, suppose, the rate of the share, the shares value increases beyond 1,000, then the number reduces to that level only. So it is two-way. Either maximum 20% of the total number of shares, or a maximum of value of rupees 1,000 shares. Whatever you reach earlier, you have to stop over there. Beyond that, you cannot increase your shareholding. See, this is an act which dates back to 1912, right? So 20% is easily understood. That 20% is easily fine. but rupees 1000. Just understand what would be the value of rupees 1000 at that time. Right? We have rupees 1000, it dates back to that time. That is why you are so confused that how come 20% of share we can compare with rupees 1000. Rupees 1000 was laid down in the act in that time when it was 1912. That is why this confusion is there. But it still holds today. It has not been amended. It still holds there. It is there in your study material. Right? So, yes, investment of reserve fund outside the business. Usually, the reserve fund is kept for contingencies, but some state acts allow their cooperative societies that they can use the reserve fund for their working capital purposes, to use in their business to improve their operating cycle, or they can invest as per the provisions of the Act, as we have done investment in 5 broad areas, or they can be used for any other public purpose to promote the object of the society, to promote the purpose of the society, for which purpose the society has been incorporated. The society has been formed. So, subject to State Act permission, subject to provision of State Act, we can use the reserve fund for working capital, for investment, and to promote the purpose or the object of the society. If State Acts don't permit, then we have to keep the reserve fund as it is. Then it says contribution to education fund. Yes, again, some state acts ask their cooperative societies to contribute annually to the education fund maintained at state level. Maintained at state level, some federal state education fund they maintain, and they ask the cooperative societies to contribute some money towards the education fund. But one point which is be kept in mind over here, that when you contribute to the education fund as per your state act's directions, it is a charge against profits and not an appropriation of profits. Right? You all know what is a charge and what is appropriation of profit. I need not tell that. It is a charge against profit. Means you take it as an expense. You take it as an expense that you have contributed to the state education fund, the federal education fund you have contributed. So you can claim it as an expense, the contribution you have made towards the education fund. A society can claim it as a fund and then calculate its surplus, the profit. Even though societies are formed on the basis of, on the principle of cooperation. But if it is a business, whether you are doing it for profit or not, if you get surplus, you have to pay tax on that. So cooperative societies are taxable, right? Don't assume that if it is formed with the purpose of cooperation, people are helping each other, people are supporting each other, so tax is not, they are exempt from tax. It is not like that. They are not exempt for tax. That is why this term charge and appropriation. Transferring amount to the reserve fund is an appropriation. But transferring amount for charitable purpose is an appropriation. But transferring amount to the educational fund, contributing to the educational fund maintained by the state, it is a charge against the profits. You can claim it as an expense and then calculate the net profit on which tax is to be paid. So keep that in mind. These were the points you need to keep in mind. Much limitations, Satish. There are many more limitations on the members of a cooperative society. So, audit of a cooperative society. Now you are auditing the accounts as a whole. As a whole, we have done points. As a whole, as an auditor, we have to keep in mind that what are the various concerns as an auditor we should know about the cooperative society on a broader prospect. Now we have come to the books. The special features of a cooperative audit. What are these? Examination of overdue debts. What does that mean? See, first we have the whole picture over here, starting from examination of overdue debts. Sanjay, I am talking about the registered ones. This doesn't apply to the unregistered. This is registered, right? We'll come to the unregistered part. definitely. But abhi we are talking about register. So examination of overdue debts. What is that? So you have advanced money to your members. Like it is formed on the principle of cooperation. We say democracy, government, by the people, of the people, for the people. Like in the same way, cooperative society is formed by the people, by the members, of the members, for the members. So you have advanced money to your members only, but there are some overdue debts. So you have to properly classify them. Which debts are more than 6 months up till 5 years old, and which debts are more than 5 years old. So you have to appropriately classify them accordingly. And the auditor will have to ascertain with respect to overdue debts. What do we ascertain? Provision. Provision for doubtful debts. Whether they are being made properly and accounted for in the books of accounts or not. Next is overdue interest. We have read in bank audit, we have learned in bank audit that if there is an interest which is overdue and not paid, we take it on accrual basis, it has to be reversed. So in case of overdue interest, it should be excluded from interest outstanding and accrued while calculating profit. So what is overdue interest? Overdue interest is that interest which is getting accumulated on the amount which is overdue. Overdue means the due date has passed. The amount is still not being returned. Interest is being charged on that overdue amount. So you pass accounting entries of outstanding interest, interest received in advance, right? So these are the adjustment entries we pass at year end. From that interest outstanding entry, you won't include the overdue interest, and overdue interest is interest accrued on overdue amount. We don't take it in the profit and loss account, the overdue interest, right? To just get to know the actual position of the society. Then we have certification of bad debts. Okay, this is like what? Certification of bad debts means if you are charging bad debts in the accounts of a society, if you are charging bad debts in the accounts of a society, they should be certified by the auditor or the managing committee, the governing body of the society. This is important. Okay. Then valuation, verification of assets and liabilities. We all know about it. Chapter 9. Their existence, their valuation, their physical presence, everything. Adherence to cooperative principles. What is the cooperative principle? The cooperative principle is you have to work for each other. There should be no selfish motive involved. There should be no profit motive involved at the cost of the members. The expenses which you are incurring, they should be only for what is required, right? You should not play with the members' money for your own benefit, or anybody, whosoever is playing it. Adherence to the principle of cooperation. Observations of the provisions of the Act and rules. Definitely, observation of the provisions of the Act and the rules. You have to adhere to the rules, the Act, the Cooperative Societies Act, or if you are governed by the State Act, State Cooperative Act, you have to adhere to its rules, the law. Then comes verification of members' register and examination of their passbooks. Definitely you have to check the members' register, right? You have to check the members' register, check the entries being passed in their passbooks. So there I can even fit an essay, right? If you are getting this question in your exam. See, checking members' passbooks and something like that. I just remember essay 505. Specific considerations, audit evidence, loan balances, right? I can check the loan balances. I can check their passbooks. So this is how you write audit answers. So in the chapter of cooperative society, I'm getting a question of cooperative society and I'm just fitting it essay 505. in this particular point. Verification of members register, proper entries have been made into it, their share, their contribution, if any loan has been given by them to the society, any loan has been advanced to them by the society, checking entries in their passbook, cross-checking it. It's like a bank reconciliation statement. It's the same. Checking the society's register with the members' passbook. Okay? Then we have special report to the registrar. Definitely, if the auditor feels, like we have done in the chapter of fraud, if the auditor feels that a fraud is being committed or was committed and he traces it, he has to report it to the central government if it seems to be greater than equal to 2 crores, right? And done in the chapter of fraud. In the same way, if in the case of a society, an auditor feels that there are some irregularities he found in the working of the society, he can make a special report, special mention to the registrar of societies to look into the matter. What could be such irregularities? Personal profiteering by some members. What is personal profiteering? Earning profits out of the society's money at the cost of other members. Then there could be a fraud, mismanagement, disappropriation of advances and reckless advancing. It could be like that. If you have surplus funds, you are just giving money. To be le, sab le lo money. No, it's not like apna sapna money. It's not like that. You have to take care of your assets, your cash. The government has laid provisions in the Act that you can make a reserve fund, you can appropriate to the reserve fund, you can invest the surplus money in the given securities. It's not like this, the money collected from members and now you give them in the form of loan, whether they require it or not. Right? Then we have audit classification of society. So there is this norm that you award a class to the society. After adjusting all their internal controls, everything, you award a class to the society. So as per different classes, different benefits, different compliances are there for the societies. Okay? So this is the point, awarding a class, audit classification of the society. Then we have discussion of draft audit report with managing committee. You have to discuss, like you discuss the report with the directors, you discuss the report over here with the managing committee. Okay? That is it. These were all the points 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay? So how do you move? Okay, in a cooperative society, there is a governing board. There is a chairman, there is secretary. Like you have seen in that particular series on Ek Mein Vil Secretary, the treasurer, there is a governing body. That is the governing body, the members themselves. They select members among them, they select the chairman, the vice chairman, the treasurer, the secretary. They are the governing body. They take the decisions, right? 2 to 3 questions on that. There is the thing like those charged with, can call it those charged with governance. Those charged with governance are those who are the owners, like, right? But they are just managing the daily affairs of the society. Okay? I hope Radha, Haritha, that's clear. Okay, Payal, overdue interest. Overdue interest is the interest which is getting accrued on the amount which is overdue. Suppose a member owes the society 10,000 rupees and it has been 4 years. He hasn't returned that money. It was due 2 years back. But till then it has not been returned. When an amount which was due on a particular date and it was not paid by the member, it becomes overdue. And the interest which is being charged on that overdue amount is known as overdue interest. Right, Payal? As per the working of the society, its accounts and everything, okay, the overall performance of the society, the auditor awards a class to the society, right? There is a slab by the registrar under the Act. As per that slab, you give points to the society. As per the auditor awards the class to the society. If the management is not satisfied with that particular class of the society, right, it may ask the registrar, it may move an application to the registrar. Registrar, on being satisfied, may ask for a review of the decision again. So the auditor awards the class to the society on the basis of overall performance as per the Act. Management satisfied, not satisfied, it can move an application to registrar. If registrar satisfied with the application, it can ask for a review of the class. Because the the classification carries different benefits and compliances. Okay. Next, we move audit of a cooperative society. So this is simple. The auditor has to tell that whether he has obtained all the necessary information, whether the explanation given in the accounts represent true and fair view, the profit and loss gives true and fair view, the balance sheet gives complete state of affairs, proper books of accounts are kept, and the balance sheet and profit and loss examined by him and agreement with the books. All this we have done. This should be there in his audit report. You can learn it directly from here. So on completion of the audit, the auditor has to submit his report to the society, and then respective authorities like district special auditor, this is a point you need to learn. Then audit report has to be submitted in the prescribed form specified by registrar. You have to submit to the registrar as well. The form of the audit report to be submitted by the auditor is prescribed by different states, right? So what schedules the auditor needs to attach with the audit report? The contrary transactions, then all the sums which ought to have been but not have been brought into account by the society, some sums lying unattended, unaccounted for, anything irregular. There are 5 schedules. There you have got 5 schedules in the presentation. Any property belonging to a society which appears to be bad or doubtful, any material irregularity in expenditure, any other matter specified by the registrar. There are 5 schedules as per the format available. You have to fill in those schedules. Even if there is no irregularity, you can file nil report in these schedules, right? Prashant, corpus is the capital contribution. We'll do that in charitable institutions. So, further, in addition to the audit certificate, some states require 2 questionnaires. These are known as the audit memos. The first set of questionnaire of audit memo, general nature, applicable to all types of societies, whether it's a bank, whether it's a consumer store, whether it's credit society. The second set of questionnaire is specific for a particular type of society. These questionnaires are drafted in detail and serve the practical purpose of audit program. So there are 2 questionnaires, 2 audit memos. One is the general and second is the specific. General one is applicable to every type of cooperative society, whether it's a bank, whether it's a housing society, whether it's a producer society. The second one is specific one and depends upon the type of society. So the second one is the more detailed one, which the auditor has to fill. The audit report in a narrative form is also required to be submitted to the chairman of the society. Generally, this report is, as per convention, divided into 2 parts. What are the 2 parts? Part 1, which is very important, throws a light on comparative financial position, capital structure, solvency position, everything material, everything important upon the financial health of the society, right? The auditor's comments are there upon the working of the society, and he also gives his suggestions and improvements, and it should be properly presented, like properly bifurcated into mistakes, suggestions and everything, right? Part 2 is just observation about the routine nature, which are like just a formal, a compliance, that these are the products you deal in and this is how the working goes, something like that. So there are part 1 and part 2 of the narrative report, which the auditor has to submit to the chairman of the society. Okay? No, Sanjay, no. Awarding class to the society has nothing to do with the qualification by auditor. This is just a trend. This is just a particular feature which has been given under the Act, because on that particular class depends the benefits which can be given to the society or the compliances which the society has to comply with, right? It has nothing to do with the qualification of audit report. Awarding a class to the society is must as per the Act, right? Multi-state cooperative societies. Multi-state cooperative societies are those societies, right, whose objects are not confined to one state, they work in different states. So they have a separate act for them, which is the Multi-State Cooperative Societies Act, and it came into force in August 2002. And as per the Multi-State Cooperative Societies Act, these societies, MSCS, have to keep books of accounts. What are these books of accounts? The same as a cooperative society has to maintain: assets, liabilities, sale, purchase, money received and expended, and if they are engaged in production, manufacturing account, utilization of material, labor, everything relating to costing. So in the points we are going to deal, yes, we are definitely, I do need a break after this. We'll come to the governmental part. Just 5 more minutes, then I'll show you. I have a video for you on cooperative societies, then we'll take break. Okay? So qualification of auditors, then appointment of the auditor, powers and duties of the auditor, contents of the auditor's report, and power of the central government to direct special audit in certain cases. Right? So in the audit of a multi-state cooperative society, qualification, appointment, one and the same, like we have done in the part of cooperative societies, right? In a normal cooperative society, the qualification of auditor and all that, this is there in your study module. The qualification of auditors, the appointment of the auditors, the powers and duties of the auditors, and the content of the audit report. Okay? It is there in your study module. You can read from that the audit of a multi-state cooperative society. Fine? Then you have, there are some differences which are there in these points from a non-cooperative society. You have to keep that in mind that a multi-state cooperative society, you have a chartered accountant. Okay, within the meaning of Chartered Accountants Act, only that person can be appointed as the auditor. There are also some disqualifications. You will find it in your module. You have to learn them. Any body corporate firm, any officer or employee of a multi-state cooperative society, then partner or employee of multi-state cooperative society, any person who is indebted to the society or who has given guarantee for on behalf of the society of ₹1,000, of greater than ₹1,000. So that particular person cannot be appointed as an auditor of a multi-state cooperative society. Right? Then appointment of auditor, first auditor is appointed by the board within 1 month of registration. If you want me to write this on board, I can write it, but it is there in your module, and as we have done in the case of LLP or normal cooperative societies, it can be done from the module itself. It is given there very beautifully. We need not discuss this, but if you want me, I can discuss this. Right? What is there to discuss in this is the power of the central government to direct special audit in certain cases. The central government can ask for a special audit of a multi-state cooperative society when it feels, as you can see in the picture, the affairs are not being managed in accordance with prudent commercial practices. Irrational management is there. They are being managed and it will cause injury in interest of trade or industry or business. They are being managed in such a way that the trade or the business, the industry is going to get affected. Or the financial position is such that would danger to its insolvency. So, it is on the verge of getting insolvent, or it is harming the market, it is distorting the market with its procedures, with its working, or there is irrational management. In these cases, the central government can ask, for the special audit. What is that? As you can see, The central government may anytime order for the audit of a special audit. The central government shall order for special audit only if the government or state government, central government or state government or both hold 51% or more of the paid up share capital of such multi-state cooperative society. So, a multi-state cooperative society's special audit can be directed ordered by the central government only when the central government or the state government or both together hold 51% or more of the paid up capital of that particular society. Otherwise, they cannot order a special audit. The auditor, it may appoint either a chartered accountant or the multi-state cooperative society's auditor himself. So whosoever has audited the multi-state cooperative society, the government may ask him again to conduct a special audit, or it may appoint his own auditor. But the special auditor shall have the same powers and duties. Contents of the audit report, the special auditor shall, in normal circumstances, the auditor makes his report to the members of the society. But in this case, since central government has ordered for the audit, so the report would be addressed to the central government as per its directions, right? After receiving the report, if the central government may take as action as it feels correct for the time being in force. If the central government doesn't take any action within 4 months of the date of the receipt, the government sends the multi-state cooperative society a copy or relevant extract of the report with comments thereon and requires it either to circulate that copy to members or discuss it in the meeting. So the government may take action within 4 months of the submission of report by the auditor. If the government doesn't take any action, it sends the copy to the society itself and asks them, either it sends the report with comments by the government, or it asks them to circulate it to all the members or read it out in your meeting. Everybody should know what the special audit has given his observations. The expenses of conducting a special audit are maintained by the central government but borne by the society itself. Right? Let's move ahead. There are 2 small sections left. Inquiry by Central Registrar under Section 78. The Central Registrar may, on a request from a federal cooperative to which a multi-state cooperative society is affiliated. So, the multi-state cooperative society might be affiliated to a state board, a federal cooperative, or a creditor not less than 1/3 of the members of the board, or not less than 1/5 of the total number of members of a multi-state cooperative society. So, what do we have? We have request from a request for inquiry could be received from a federal cooperative or a creditor of the society or 1/3 of the members of the board, at least governing body, board, or 1/5 of total members. Any of them can move inquiry. Any of them can move inquiry to the Central Registrar. So the Central Registrar can ask for an inquiry or direct some person. The Registrar himself can ask for inquiry, or it can direct some person in writing to conduct an inquiry into the constitution, working and financial condition of the society. However, the society must be given an opportunity of being heard. It should be given a notice of at least 15 days, that we are giving you 15 days. Why should an inquiry not be conducted in your case? Okay? So these are the powers given. Free access to books as given to auditor. These are the powers given to the person who makes the inquiry, and he has to make a report to the Central Registrar. The Central Registrar, within a period of 3 months, communicates such report to the society and to the financial institutions who are affiliated with the society. Right? Then the last point in the case of cooperative society is inspection. So there is difference between inquiry and inspection. Inquiries, you ask for certain questions. You ask them certain queries. You ask them certain doubts. You ask questions. Inspection is you look into the matters. You inspect the books, the working. So inspection, again, a federal cooperative, a creditor, not less than 1/3 of the members, not less than 1/5 of total members. 1/3 members on the board, 1/5 total members of the society. So they may ask for inspection. Again, special order in writing, registrar may himself or ask a person to conduct such inspection. Opportunity of being heard should be given for 15 days. Same powers, access to books, furnish such information, and he should move his inspection report to the multi-state cooperative society within a period of 3 months from the date of completion of such inspection. So in inquiry, the person making inquiry has to move his report to the central registrar, and the registrar further sends the report to the society. In the case of inspection, the inspection report can be given to the society itself within a period of 3 months from the completion of such inspection. It's all written over there. The board, Haritha, the governing board, the chairman, the secretary, the treasurer, the vice chairman, the governing board, as there is board of directors in case of a company, here is the governing board, which governs the society, which takes care of all the rules and working of the society. Right? Rahul? Okay. So, let's stop here. We are done with cooperative societies. Cooperative societies is an important part of this chapter. That is why we have spent so much time. Now, we will take a break for 5 minutes. Before that, I have a video to share with you. People are asking me example of cooperative societies and types of cooperative societies. So I'll share a video with you on cooperative societies, right? As soon as I stop the video, there would be a break for 5 minutes, and then we'll continue further with our next topic, right? Okay. So let's here we go for the video. So वीडियो दिखा रहा हूँ, वो चल नहीं रहा है. I'll fix this. Just सर वीडियो दिख रही है विजय जी? विजय जी hope, Rahul, you got your answer. I hope it was clear. The types of cooperative societies, it is not a part of your syllabus, so we couldn't discuss that. I could tell you just out of your curiosity, you guys were curious to know about the different examples of cooperative societies and types. The video was for this. Okay, 2 doubts and then we'll take a break. Swarna, federal cooperative is cooperative society of cooperative societies. A federal cooperative, for example, in which many cooperative societies are members of that cooperative society, right? Federal is one where at least 5 cooperative societies should be a member. There are voting rules, there are other rules, the managing committees and all that rules are there. So you can understand a cooperative society having many of the cooperative society as its members is federal cooperative society. The federal cooperative, right? Dikshit, you want me to audit the PM CARES fund? Yes, we'll definitely meet one day and can it all along. Right? Yes, Ramneet, in case of default of payment shall be recovered from MSCS as land revenue. Explain this line. So what happened in the British era? This recovery as if there were land revenue. You people must have read this line time and again and number of times in your law as well. In corporate law. Recovering the money as land revenue, as you are recovering land areas. So what is this particularly? In the British era, okay, this is a term from the British era. All our laws happened in the British period. So it was a term that the people have to put a survey report as they have to generate, they have to deposit some land tax or something like a fee in the annual fee into the government, to the collector, right? The surveyor. But if they didn't, they would recover that money out of their land only. They would auction the land and they would recover the money. So a term came to be known as if you are recovering land areas. This means they can even auction your assets. It is your personal liability. They can auction your assets to recover their areas. This is known as Ramneet. This is known as recovering the land revenues. Recovering like the land revenues. Like land areas. Okay, Payal will come ahead. Let's take a 5-minute break, okay? Don't jump to Nidhi companies, please. Let's understand the concept of cooperative societies first, then we'll compare it with other forms of organization. We are taking 5 minutes break and after we return, we'll start with audit of local bodies, right? Okay. Break. Vijayji, break hai. So we are back and we had done LLPs and cooperative societies. So cooperative societies is an important topic, and so is our next topic, local bodies and government audit, right? So local bodies, what are local bodies? Local bodies are the government bodies at your town level, district level, the municipal corporations, right? These are the local bodies. We have to audit the bodies. The local bodies is we have to audit these institutions and look into their accounts. So this is what is happening, that we have all read about the audit and how we are applying our basic knowledge, the knowledge, expertise knowledge we have gained during the past 2 months on these different audits, right? So let us move ahead and let us start again. Let us move to the topic of local bodies or local authorities, right? Let's move ahead. Have local bodies. Okay. Local government in an urban area, municipality. Local government means the particular local self-government which is administrating a village, a town, a city, or any other area smaller than a state, the panchayats. So the people forming that local government are the inhabitants of that area. A municipal councillor from your area will be a person from your area. Usually it happens that a municipal councillor is a person from that particular area. There are few exceptions. Usually it is like this. So it says local inhabitants, right? Sundari, just by 10 to 15 minutes, that's it, not more than that. We'll extend our class, the last class, because you people would be having too much doubts. Some of you wanted tips and some of you wanted exam tips. I came across a question in the last class. Sir, I want to secure more than 17 audit, a theory exam. You have to give me the tips for sure. I was a bit delighted at this question that this particular student is asking me for tips for securing 70 and more. The condition is that, right? So I have reserved those questions for the last class. We'll finish our syllabus in the last class, right? After that, those people who are interested in exam tips, important questions, how to study for the exam, how to prepare for the exam in the coming 2 months, how to do the revision and all that, we'll discuss here in short. We'll devote at least half an hour to your exam preparation. Okay? So next class is bound to get extended, but not this class. We'll try to keep it by 8:45. The 15 minutes later doubts, right? So the local self-government is composed of the inhabitants of that particular area, right? And distinct from central and state government. Local bodies have authority to collect input, to collect their income depends upon the local taxes and all. They have their jurisdiction over their limited area, the local area they are governing. So municipal government in India, it has 5 distinct types of local authorities. The urban local authorities, not the rural ones, the urban. We have the municipal corporation, the municipal council, a notified area committee, a town area committee, and a cantonment committee. Municipal council, municipal corporation, notified area committee, town area committee, and a cantonment committee, right? So taxation powers within a committee. What is the source of revenue for the government? Be it a local, state or central government, the taxes. So again, the taxes which a local body can collect, property taxes, octroi, and other water and sewage cess, professional tax, and advertisements, taxes on animals and goods, tolls, show tax, etc. A host of this is there in the presentation. Municipal authorities are endowed with specific local functions covering regulation, developmental activities, right? Regulation and developmental activities, like the roads in your city. The roads in your city is regular maintenance and development activities. The parks in your area, the roads within the city, they are the duty of the municipal corporation. Expenditure incurred by the municipalities and corporations can be broadly classified as general expenses, administrative, public health. What have they expended on public health? The civil hospitals in your area, then education, the public works, and other areas. Right? Let's move ahead. So, what are the types? So, one of the important receipts of a local body is the grants, the donation it receives, right? Apart from the local taxes and local fees, it receives this. You have a parking lot, a public parking lot, so the municipal corporation is taking, issuing receipts and parking fee. So from that, grants, general purpose grant, we all know. General purpose grant is for to bridge the gap, the deficit between the receipts and the expenditure. That is a general purpose grant. Can be utilized in any work. This is for your particular, not for any particular work. Specific purpose grant, it is given for a particular, like you have to you have to renovate this park for the inhabitants of this area. So that particular money received, the grant received is for the beautification of the park, beautification of the city. So that particular money has to be utilized for that particular purpose only for which it has been received. This specific purpose grant. Statutory and compensatory grants, these are the grants, these are provided under various acts to local bodies as a compensation if they are losing any revenue because of the state government's taxes or state government takes over tax from them, right? From their jurisdiction. For example, in current scenario, the GST compensations. This isn't just an example. Right? Central government has taken over GST from the state governments, right? They do have SGST, but central government has major share. So the states demand compensation. In the same way, local bodies, when a tax is taken over by the state authorities, they demand compensation and they are given statutory and compensatory grants. How does a local body work? The financial administration of a local body is divided in three parts: the budgetary procedure, the expenditure control, and the accounting system. Pratibha, I have this with me. The first thing I'm going to cover in the next class is the amendments only. Okay? So be assured of that. The first thing I'm going to cover in the next class after the completion of syllabus is the auditing amendments applicable for November 2020 exam for you people. So be assured of that. This is the first thing. I have this in mind with me. And that's the most important part. While you, I don't know about you, but as the faculty, I should not forget that. Okay. So budgetary procedure is making budgets and then assessing performance as per those budgets. We have collected this much fund, this much grants we are going to receive from the state government, and then we have to expend it for this particular park, parking, maintaining roads, constructing some public institution, some public property, to control the expenditure and the accounting system. So let's move ahead to budgetary procedure. Objectives that funds are raised and monies are spent by executive departments in accordance with rules and regulations. So local bodies kind of system is not that federal, right? Local bodies work among themselves. The powers are usually issued to the municipal commissioners. So we have to take care that expenses are being incurred in a controlled manner. Budget is usually to determine the level of taxation and rates and the ceilings on expenditure. That this is the rate of taxation, the local taxes, and we are going to get this much in revenue. We have to budget our expenses. It is nothing like this that we are constructing a hospital and we have to spend all the amount of that. Whether whether it is feasible for our government local body to construct a hospital, or we have enough money to renovate a park. Municipal budget formats and heads of accounts vary from state to state, right? There are variations. So local bodies vary from state to state. Even the budget formats, there are variations between the budgets of municipal corporations and municipal councils. Okay? There is no strict separation between revenue and capital items, right? Very important point. Very important point for your correct incorrect, guys. Very important point. There is no strict separation between revenue and capital items. Usually there is a head called extraordinary items which cover most of the capital transactions. So you need money to expend, whether it's revenue, whether it's capital expenditure. No bifurcation is done. But what can they do is they can keep an account extraordinary items, and they cover most of the capital transactions, right? A number of special funds are there with the local bodies, like for roads, separate budgets for your water supply, sanitation, transport, electricity. To control the expenditure, the state and central government level, there is a clear-cut demarcation between the legislation and executive. So what is the demarcation between legislation and executive? There is a body which is doing the work, and there is a legislation which has enabled the work, which has laid down rules and regulations for the work to be carried out by the executive. So there is a demarcation, like there is a demarcation between management and ownership in a company. In the same way, at the central and state government, there are MLAs, there is chief minister, and there are IS people. The IAS are the executives who carry out the work as decided in the state legislative assembly or the parliament. But at local level, since the local inhabitants rise to power, so there is no such clear-cut demarcation. The powers are usually issued to the municipal councillors, so we have to take care that whatever money has been issued for their particular ward, for their particular region, proper accounting, proper accountability is there for the expending that money, right? And then we have external audit by state government as only instrument of controlling municipal expenditure. So they can get the accounts of a municipal committee audited. So accounting system, yes, they usually follow cash system of accounting. The local bodies, right? So what are the objectives of audit of what? No, Mrs. Swarnpriya will try to wind it up before that. So reporting on fairness of the content and presentation of financial statements, reporting upon the strengths and weaknesses of systems of financial control, adherence to legal administrative requirements, whether value is being fully received or money spent, detection and prevention of error. Normal points. What are the objectives of audit of local bodies? Whatever work is related to them, we have to report upon that. Detecting and preventing errors, normal. Whatever the objectives of audit are, we have to fit those objectives into local bodies as per their nature. What is important is this. Audit program for local bodies, you will get the presentation, the answer as it is over here. If you are being asked draft an audit program for the audit of local bodies, you can write it as it is with in your own language or something like that. It is there in study module as well. I have done nothing. I have just given them the appropriate headings to make it look more presentable, right? So what is that audit program for local bodies? So first of all, appointment. So external control of municipal expenditure is exercised by the state government through the appointment of auditors. State governments control the municipal corporations, the municipal governments, and they appoint auditors to conduct the audit of municipal corporations. This is how externally they are being controlled, right? The municipal corporations, but there are some municipal corporations like the Municipal Corporation of Delhi, Mumbai, other metro towns. They have powers to appoint their own auditors for regular external audit. So the auditor should ensure appointment, whether he has to be appointed by the state government or the municipal corporation is such that it itself has got the power to appoint the auditor. The appointment should not be void. This is a very important point. Auditor's areas. So auditor in the local body, while auditing, should report upon the fairness of the contents and presentation, the strengths and weakness of the system of financial control. How are they collecting the money and how are they expending it? Are they expending it rationally or irrationally? For example, in some municipal corporations, they have started with, you can say, the economical kitchen, you can say the rasoi, economical kitchen, where the needy are given food at a very economical cost. So, such projects are to be taken care of by the auditor, whether they are being run successfully or there are any weaknesses. Then adherence to legal or administrative requirements, whether value is being fully received or money spent, whatever money is being spent by the authorities, whether the value is being received. For example, while constructing a road, you have shown this much amount of money was expended, this much lakhs or crores of rupees were expended. One rainy season went and then the roads are all full of potholes, mud potholes. People are falling prey to accidents and all that. So, is this the value we are getting out of the money spent? The auditor has to report upon this. Then rules and regulations, the auditor should ensure that the expenditure conforms to whatever the rules and regulations have been laid down in the council. The expenditure is being done appropriately, being incurred accordingly with proper sanction, proper evidences, proper vouching. Authorizations, yes, all the sanctions, whether capital or general sanctions, should be appropriated, should be given by the competent authority. Provisioning should be there for funds, which fund to be used for what particular purpose, you have to provide for it, right? You should keep aside, you should keep provisions for various expenses and various funds to be used for in future. You have to get evaluated, the auditor has to evaluate the budgeted performance, what was projected for the project, what was budgeted and how has the corporation performed. Is there any deficit which they can cover or can they cover or they can't cover, right? So these are the points we have to understand under local bodies. Ultra wires, yes, Vasudevan, ultra wires means beyond the powers. You might have read it in your company law as well. Ultra wires means beyond the authority, beyond the powers. Whatever is not in your powers, that is beyond your powers. So it is ultra wires. Ultra wires means this. Whatever is not in your authority, you are not bound, you are not authorized to do that. It is not within your powers. If you do certain kind of any act, perform any act, certain kind of, or you resort to any kind of such sanctions or work, this is known as ultra vires your powers, right? Ultra vires objectives. Fine, Vasudevan, is it fine or should I explain it more? Just reply me. Ultra vires is a very important Latin term. It is very important for your law exam as well. Okay. So that was all about your local bodies audit. So see what we have done, from sole trader to partnership to LLP, we went to cooperative societies. We are just increasing the complexity of the topics, right? Sole trader, partnership, LLP, cooperative society. Then from cooperative society, a person opens a shop near his home, sole trader. Then he grows, opens a partnership, right? Then he further grows, forms a group and forms a LLP and then forms a group, becomes a cooperative society. Then he becomes so famous and he is so experienced, he fights the elections and reaches the local body, the municipal corporation. Now he is a politician. Now when he reaches the local body, he grows again, becomes MLA, MP. Now he comes to the government audit. So a person who started with a shop as a sole trader, now he has found a place in the government. This is what we call growth, right? So this is in itself a story. The sequence which I have followed: sole trader, partnership, LLP, cooperative society. Cooperative society, he got to meet new friends, new members. Then from cooperative society come local bodies. Then he rose to the stature of a government. Right, now we'll start with government audit. Okay, just 5 to 10, just 10 minutes, and then we are sorted. we'll wind up the class. Government audit. Audit of the government. Right? I'd like to share something with you, and you guys have to support me. This is something which is not written in the book. There is local body. Right? When we rise up from here, we have State Legislative Assembly. Then we have the Parliament. Right? Above all, the President. Okay? I'm just building the base for the government audit, right? So this is something which is very interesting and builds a base. So this is for local bodies, municipal corporations, right? We have done how to audit local bodies. Then comes State Legislative Assembly, the Parliament. We all know Parliament is two houses, Lok Sabha and Rajya Sabha, right? And State Legislative Assembly is this one, the Legislative Assembly. So here, the state is governed here. The rules for the state are made here. The acts for the state are made here. And for the whole nation, the acts and the laws are made here. In the Parliament. Right? As you know, whether it's the Parliament or the State Legislative Assembly, MLAs are the part of State Legislative Assembly, the members of Legislative Assembly, the members too, and the members to Parliament are known as MPs, right? With the elections, they contest and we elect them. So what happens is, the government every time, whether it's a state government or it is our central government, it comes up with a budget, an annual budget. It tells us that it hopes to get this much amount to be able to collect this much amount from taxes and various other incomes to the government. The main source is tax only, and it proposes to expend such monies in the coming year. So if it can raise 1 lakh crore rupees, it wishes to expend, and or it has to expend for the betterment of the nation and for the need of the nation, 1 lakh crores, 1,50,000 crores. So it is in a deficit of 50,000 crores, right? This is what a budget tells. So X, various your incomes and expenses are discussed over here in the Parliament, in the State Legislative Assembly, right? There is a committee by the name of PAC. What is that committee? Public Accounts Committee. We call it PAC, the Public Accounts Committee, right? The Public Accounts Committee. This is the committee which has been enshrined with the responsibility of looking after what the government is expending and what income is it getting from the nation, the citizens. As the name suggests, a committee accounting for the general public is Public Accounting Committee. Radha, I'll come to that. Okay. So these committees, members of these committees, they look after the accounts of the acts the various expenditures and incomes laid down in the Parliament and Legislative Assembly. That is why budget is placed, budget is read in the respective houses, the Parliament and the State Legislative Assembly. Okay, this has been the trend, and you will often get to read a term in this chapter, the Consolidated Fund of India. What is the Consolidated Fund of India? Whatever taxes the government is levying on us, is collecting from us, it goes to a fund known as the Consolidated Fund of India. And we have to audit, the person who is auditing the government, he has to audit the consolidated fund and the expenditures made out of that fund. Right? So we'll get to hear a term, the Consolidated Fund of India. So this was all I needed to talk to you about. So here we have the definition. As per the UN Handbook on Government Auditing and Developing Countries, we have this definition what government audit is. And this definition is very important for you. That is why I have broken it into 8 parts. This is the whole definition, people, and I have broken it into 8 parts in the form of question. You have to write it in running length without any such questions. Whatever I have written in parentheses, whatever I have written in the brackets, you don't have to write that. You just have to write there the main answer I am reading. Government audit is the objective, systematic, professional and independent examination of financial, administrative and other operations of a public entity made subsequently to their execution for the purpose of evaluating and verifying them and presenting a report containing explanatory comments on audit findings, together with conclusions and recommendations for future actions by the responsible officials, and in the case of examination of financial statements, the appropriate professional opinion regarding the fairness of presentation. This is the whole definition of government audit, and the question which comes in the exam, which is being asked in the exam is, what is government audit? Explain the objectives of government audit. What is government audit? Who conducts the audit of the government? Explain the powers and duties of the Comptroller and Auditor General of India. Right? So definition of government audit is really important. I would have done away with it, skipped away with it, but we have to learn this definition. And this chapter is going to be there in your CA final syllabus as well. Right? How to learn it? So to learn it on the basis of question I have written in the brackets. What is government audit? It is the objective, systematic, professional and independent examination. OSPE. O-S-P-E-I. OSPE. Okay? You can learn it from the word auspicious. The short form of auspicious is OSPE. So, what is government audit? Government audit is OSPE, objective, systematic, professional and independent. Right? Objective, systematic, professional, independent examination. So first, we have to write what? We have to think in our mind, what is government audit? It is objective, systematic, professional and independent examination. The answer to what? Then which statements? Financial, administrative and other operations. So you have to conduct examination. Examination of which areas? You have to conduct examination of financial, administrative and other operations. Whose operations? Of a public entity. When have to conduct this examination? Made subsequently to their execution. So this examination is made after such operations have been executed. Made subsequently means after. Subsequently to their execution. Why? Why do we conduct such examination? For the purpose of evaluating and verifying them. How do you conduct them? By presenting a report containing explanatory comments on audit findings together with conclusions and recommendations for future. By whom should examination be conducted? By the responsible officials. So till 7th point, it is a running length definition, and the last point is a special case, and it has been joined using the word and, conjunction and in the case of examination of financial statements, expressing the appropriate professional opinion regarding the fairness of presentation. When you are examining financial statements, expressing your professional opinion whether the presentation is fair or not. So government audit, on the basis of these questions, you can learn this big definition. Nikita, this is included in the audit of charitable institutions, right? Okay. So government audit is the objective answer to what? Of which examination of which operations? Whose operations? When such examination is carried out? Why such examination is carried out? How such examination is carried out? By whom such examination is carried out? And then a separate case. So you can learn the definition of government audit in this manner. What are the objectives of government audit? Again, question which is asked along with what is government audit. It serves as a mechanism or process for public accounting of government funds, appraisal of government policies, public accounting of how is the government working, the management, the policy aspects of public administration, as well as accountability of the officials administering them, the people who are maintaining those funds, the people who are maintaining, administrating the funds. Final execution of the operations. Execution of the operations, financial, administrative and other operations by the government entities. Right? Corrective actions, if there are any errors or there are any lapses, these can be corrected, and there could be administrative accountability of legislature. Right? So here we come. Who conducts? So many students are asking me, who is CAG? Here comes the CAG. The Comptroller and Auditor General of India, the Auditor of the government. The Auditor of government's workings. In India, the function of government audit is discharged by the independent statutory authority of the Comptroller and Auditor General of India through the agency of Indian Audit and Accounts Department. And this is a department of the Ministry of Finance, and this is Indian Audit and Accounts Department. The Comptroller and Auditor General, in the discharge of his functions, watches that the various authorities act in regard to financial matters in accordance with the constitutions and laws made by the Parliament and conform to the rules or orders made thereunder. Who is our current CAG? Shri Girish Chandra Murmu. Shri Girish Chandra Murmu, he is our current Comptroller and Auditor General of India. You should know this. Okay? So, under government audit, under the subtopic of Comptroller and Auditor General of India, will be covering the appointment of CAG, the remuneration of CAG, the term of CAG, removal or resignation of CAG, other legal provisions, duties and powers. Will be starting with duties and powers in our next lecture, and this particular topic is the last lengthy topic of this chapter. After this, every topic is of almost 10 to 15 minutes. Right? Every topic which is left in this chapter, audit of cinema, charitable institution, club, that is of 10 to 15 minutes. So this is the only last topic which we have to do with full patience and understand it properly. That is why I have divided it within 2 classes, so that you are able to absorb this topic. Appointment. The President of India appoints the CAG of India. Remuneration. He is given remuneration equivalent to the remuneration, salary given to the judge of the Supreme Court. His term is 6 years or up to the age of 65 years, whichever is less. His removal or resignation. Resignation he can give any time and move out. Removal, very strict, very difficult. You cannot remove CNAG India. You are accountable to the whole nation. So he shall not be removed from office except on the ground of proven misbehavior or incapacity. If he is not able, he is not eligible, he is not capable to hold the office. He can be removed only when each House of Parliament decides, Rajya Sabha, Lok Sabha, to do so by a majority of not less than 2/3 of the members of the House present and voting. 2/3 of the total members of each House should be present there and vote for his removal. And both the houses, like an act is passed in the Parliament, you cannot remove the CNG from his office in such an easy manner. He can resign anytime through a resignation letter addressed to the President of India. Okay? Right? Let's move ahead. Persons belonging to the IS cadre, persons belonging to the government authorities, they become, for example, Payal, Mr. Murmu, he was the Lieutenant Governor of Jammu and Kashmir. Before taking a chair as the Comptroller and Auditor General of India. Yes, Sanjay, he was also the first Lieutenant General of Jammu and Kashmir after 5th August 2019. You have Lieutenant General of Union Territories and he was one for Jammu and Kashmir, right? So the last topic of the day, other legal provisions. So other legal provisions, or you can say other constitutional provisions, right? These are constitutional provisions, not legal. Legal provisions are those that has been written wrong in the presentation. I'll correct it. Legal is as per the acts. When it comes to articles, these are constitutional provisions. I'll rectify it. So Article 149 states, CAG shall perform such duties and exercise such powers in relation to the accounts of the Union. Union means the center, the states, or any other authority as may be prescribed under any law made by the Parliament. There is a specific law, the Comptroller and Auditor General's duties, powers and conditions of service Act 1971 defines these functions and powers. See, the stature of this post, a special act has been passed to cover their duties, powers and conditions of service. This stature is no less than the judge of any judge of the Supreme Court of India. Article 150 of the Constitution provides that accounts of the Union and the states shall be kept in such form as the President may prescribe on the advice of CNAG. And then 149, 150, 151 requires that reports of the Comptroller and Auditor General relating to accounts of Union and states. So he makes and audits accounts of both the central and the states shall be submitted to the President or the Governor. So in the case of Union, to the President, because President is the head of the nation, and Governor in the case of states, because in the states you have governors who shall cause them to be laid before House of Parliament or state legislature. Right? So this is what constitutional provisions are there for this. In the next class, we will start with the duties and powers of the Comptroller and Auditor General of India, and that will finish our topic. Duties and powers of the Comptroller and Auditor General of India, that will finish our topic of government audit. That is almost 60%, 40% we have done, or 60% is left. Or we'll cover that in the first half an hour of next class, and then just 10-minute topics are there to cover our syllabus or this chapter, right? The larger topics, the bigger topics, we have done all of them. Cooperative societies, LLPs and local bodies, government. We'll be doing government audit, then after that, first government, then non-government. So we'll be able to distinguish between government and non-government, right? The next class will complete our syllabus, and then we'll take your doubts, the amendments, the practice questions, whatever you want to ask me, you are free to ask me, and we'll cover that in the next class, in the last class. Before we leave, before we wind up today, I like to show you who is the Comptroller and Auditor General of India. So this particular video, it is in Hindi. So the people who don't understand Hindi, we have English subtitles for you. We have English subtitles for you in this video, right? Okay. So let's see who is the Comptroller and Auditor General of India.
नमस्कार दोस्तों और वेलकम टू दिस वीडियो। अगर आपको ये वीडियो इंग्लिश सबटाइटल्स में देखना है तो सीसी बटन पे क्लिक करना ना भूलें। आज हम आपके सामने लेके आए हैं यूनियन गवर्नमेंट की एक बेहद इंपॉर्टेंट फाइनेंशियल पोस्ट कंट्रोलर एंड ऑडिटर जनरल यानी सीएजी ऑफ इंडिया के नाम से जानते हैं। नाम सुन के घबराने की जरूरत बिल्कुल नहीं, क्योंकि हम आपको इसका मतलब भी बताएंगे। कंट्रोलर का मतलब हुआ वो पर्सन जो किसी गवर्नमेंट या नॉन प्रॉफिट ऑर्गेनाइजेशन के लिए अकाउंट्स से रिलेटेड ऑपरेशंस के लिए रिस्पॉन्सिबल होता है। लेकिन एंड ऑडिटर जनरल अकाउंट्स से रिलेटेड ऑपरेशन और इसका प्रमुख काम क्या है? करना या जांच किसी गवर्नमेंट या नॉन प्रॉफिट ऑर्गेनाइजेशन के लिए अकाउंट्स से रिलेटेड ऑपरेशंस के लिए रिस्पॉन्सिबल होता है। ऑडिट का मतलब होता है एग्जामिन करना।
I'll show it to you in the next class. There is some issue with the audio to the video. I'll show it to you. Just wait. Just wait. Okay, you have the audio now.
नमस्कार दोस्तों और वेलकम टू दिस वीडियो। अगर आपको ये वीडियो इंग्लिश सबटाइटल्स में देखना है तो सीसी बटन पे क्लिक करना ना भूलें। आज हम आपके सामने लेके आए हैं यूनियन गवर्नमेंट की एक बेहद इंपॉर्टेंट फाइनेंशियल पोस्ट कंट्रोलर एंड ऑडिटर जनरल यानी सीएजी ऑफ इंडिया के नाम से जानते हैं। नाम सुन के घबराने की जरूरत बिल्कुल नहीं, क्योंकि हम आपको इसका मतलब भी बताएंगे। कंट्रोलर का मतलब हुआ वो पर्सन जो किसी गवर्नमेंट या नॉन प्रॉफिट ऑर्गेनाइजेशन के लिए अकाउंट्स से रिलेटेड ऑपरेशंस के लिए रिस्पॉन्सिबल होता है। ऑडिट का मतलब होता है एग्जामिन करना या जांच पड़ताल करना। तो कौन होता है सीएजी और इसका प्रमुख काम क्या है? सीएजी ऑफ इंडिया वो ऑफिसर होता है जो यूनियन गवर्नमेंट और स्टेट गवर्नमेंट की सारी रिसीप्ट्स और एक्सपेंडिचर्स की जांच करता है। कैट की पोस्ट इंडियन कॉन्स्टिट्यूशन के आर्टिकल 148 के आधार पर स्थापित की गई है। वो इंडियन ऑडिट एंड अकाउंट्स डिपार्टमेंट के हेड होते हैं। उनकी प्रमुख जिम्मेदारी ये देखना होती है कि यूनियन या स्टेट गवर्नमेंट बिना लेजिस्लेटिव अप्रोप्रिएशन के कंसोलिडेटेड फंड से कोई खर्चा ना करें। अब ये कंसोलिडेटेड फंड क्या होता है? गवर्नमेंट को डायरेक्ट या इनडायरेक्ट टैक्सेस के थ्रू जितना भी रेवेन्यू मिलता है वो
हाँ जी विजय जी, ठीक है,
जितने भी खर्चे करते हैं सब इंडिया के कंसोलिडेटेड फंड का हिस्सा होता है, कुछ एक्सेप्शनल आइटम्स को छोड़कर। सीएजी को कौन अपॉइंट करता है? एक कैग किसी पॉलिटिकल प्रेशर में ना आए, इस वजह से उसका अपॉइंटमेंट प्राइम मिनिस्टर के रिकमेंडेशन पर प्रेसिडेंट करते हैं। लेकिन ना तो पीएम ना ही प्रेसिडेंट उन्हें अपनी मर्जी से रिमूव कर सकते हैं। एक सीएजी केवल दो ही कंडीशंस में रिमूव हो सकता है, या तो उनकी एज 65 इयर्स की हो गई हो या फिर उनका इम्पीचमेंट कर दिया जाए। सीएजी का अपॉइंटमेंट 6 साल के लिए होता है और वो गवर्नमेंट ऑफ इंडिया के सेक्रेटरी होते हैं। ऐसे कौन से रोल्स एंड रिस्पॉन्सिबिलिटीज होते हैं जो कैग को इतना इंपॉर्टेंट फिगर बनाते हैं? कंट्रोलर एंड ऑडिटर जनरल ऑफ इंडिया के रोल्स एंड रिस्पॉन्सिबिलिटीज पार्लियामेंट द्वारा 1971 में पास हुए गए एक एक्ट में परिभाषित किए गए हैं, जिसमें एक अमेंडमेंट 1976 हो चुका है। सीएजी यूनियन गवर्नमेंट का फाइनेंशियल अकाउंट ऑडिट करके प्रेसिडेंट को एक एनुअल रिपोर्ट सौंपते हैं, जिसे प्रेसिडेंट बाद में पार्लियामेंट के दोनों हाउसेस के सामने विचार विमर्श के लिए रखते हैं। एक सीएजी की जिम्मेदारी होती है ये इंश्योर करना कि कंसोलिडेटेड फंड से पब्लिक मनी स्पेंड करने के पहले पार्लियामेंट का अप्रूवल मिल चुका हो। गवर्नमेंट डिपार्टमेंट्स द्वारा किए गए ट्रेड एंड मैन्युफैक्चर, बैलेंस शीट्स एक्सेट्रा का इंस्पेक्शन और रिपोर्टिंग भी सीएजी के हाथों में होता है। गवर्नमेंट जो अथॉरिटीज को ग्रांट्स एंड लोन्स देती है, उसकी ऑडिट करने का काम भी कैग का होता है। अब तक कौन से खास काम किए हैं सीएजी ने? रिसेंटली 2G स्पेक्ट्रम केस, कॉमनवेल्थ गेम स्कैम, फॉर्डर स्कैम जैसे जो भी मेजर स्कैम्स हुए हैं, सब सीएजी ऑडिट के बाद ही सामने आए। ये सब तो ठीक है, मगर आपको क्यूरियोसिटी हो रही होगी ये जानने के लिए कि आखिर कौन है
So that's it. That was all about CAG, right? And Prabdeep, yes, Prabdeep, OFPI is nothing. I have just given a code to what is government audit. They say government audit is objective, systematic, professional, and independent examination, right? To understand what the terms are, so we don't forget any of them. Objective, systematic, professional, and independent. I have just coded them as OSPI. The OSPI of. The OSPI examination of. The OSPI examination is what? Objective, systematic, professional, and independent examination. Right, Prabdeep? Are we good? Understood? There is nothing a term like OSPI. I've just created it to just learn it. Anything else, or should we wind up? So we are winding up. Whatever doubts you have, whatever doubts we couldn't resolve, I'll resolve them at the start of the next class. Now, today is as well as previous class, and the portal is still open for another 5 minutes. You can leave your doubts there. If any of your doubts could not be attended, could not be resolved, please leave your doubts over there. Right? Okay, we wind up. Bye-bye. Meet you in the last class on Monday. Take care.